Hi friends, myself Subrata Mukherjee and you are viewing my channel Dr. Subrata Mukherjee Distance Learning in Commerce. Today I am going to discuss a problem on dissolution. This is lecture number 12 in partnership account and lecture number 1 on dissolution. Students can communicate with me through email which I have given in the description box. I would like to request all my viewers to subscribe the channel and to communicate with the students of commerce so that they can be enriched with the lectures that I have been uploading in my channel. Arun, Barun and Tarun are partners in a firm sharing profits and losses in the ratio of 2:2:1. Their balance sheet as at 31st December 2021 was as follows. On liabilities side, we have creditors 30,000, capital account of Arun 50,000, Barun 20,000 and Tarun 10,000. Total of capital account is 80,000. General reserve 50,000. And on asset side, we have cash at bank 20,000, sunny debtors 30,000, less bad debt provision 3,000, stock 43,000, furniture 20,000, goodwill 50,000. Total of asset and liability side, we have 1,60,000. The partners decided to dissolve the partnership as on that date. The following are the amounts realized. Book debts 25,000, stock rupees 48,000, furniture rupees 19,000. Arun agreed to buy the firm name and goodwill for rupees 60,000. Creditors were paid rupees 27,000 in complete discharge. Expenses of realization amounted to rupees 1,000. So the capital accounts, realization account and the bank account of the firm on realization. So we have prepared here the three ledgers. 1. The realization account, 2. Bank account and 3. The partner's capital account. Now the first balance which is given in the balance sheet is the cash at bank. So in the bank account I am writing here to balance BD rupees 20,000. Next is the sundry debtor. So in realization account we have to transfer all the balances of the balance sheet. So the first item is the debtor account. So I am writing on the debit side to sundry debtors account 30,000. I am transferring the provision. So by provision for bad debt. $3,000. Next is the balance of stock. So realization account debit to stock account. So this is 43,000. The next item is furniture. So realization account debit to furniture account. This is 20,000. And the next item is goodwill. So realization account debit to goodwill account 50,000. And on the liability side we have creditors. So creditors account debit to realization. So by creditors account in the realization ledger. Then we have the balances of capital. So in partners capital account I am writing by balance BD. We have 50,000, 20,000 and 10,000. By general reserve account 20,000, 20,000 and 10,000. So the balance of general reserve is 50,000 and that is distributed among the partners in the ratio of 2:2:1. It is given that the amount realized from debtors is 25,000. By selling the stock, the partners firm received 48,000 and by selling the furniture, the partnership firm received 19,000. So journal entry is bank account debit to realization. So in realization account I am writing by bank account. So what are the sources from which the firm realized the bank or the cash? So first is the from debtors. So I am writing a book debt or sundry debtors you can write, and in the inner column you have to write 25,000. Then from the sale of stock 48,000 amount realized, and from sale of furniture 19,000 was realized. So total amount realized is rupees 92,000. So what is the journal entry? Bank account debit to realization, and in bank account we have to transfer to realization account 92,000. Then it is given that Arun agreed to buy the firm name and the goodwill for rupees 60,000. So Arun's capital, Arun is going to contribute rupees 60,000. So in the realization account, the journal entry passed is Arun's capital account debit to realization account. So here I am writing by Arun's capital account rupees 60,000. So in partner's capital account, we have to transfer this balance. So in Arun's capital account, I am writing to realization account 60,000. So in Arun's capital account debit to realization rupees 60,000. Next, it is given that creditors were paid rupees 27,000. So realization account debit to bank account. So amount paid to creditors is 27,000. And in bank account, you have to record on the credit side as by realization account. So realization account to debit. This is the actual journal passed. So in bank account, I am writing by realization account 27,000. The next item given is the amount of expenses related to dissolution. So in realization account debit to bank account. So this is the expense of dissolution, rupees 1,000. And in bank account you have to record by realization account, rupees 1,000. So we have recorded here all the transactions that is given in the question. Now the balancing figure in the realization account represents the profit on realization, because we have a balance on the debit side. So the credit side total is rupees 1,85,000. So I am writing here on the debit side also 1,85,000, and the balancing figure is rupees 14,000 that will be transferred to partners capital account. Partners capital account. And this amount of 14,000 we are going to distribute in the ratio of 2:2:1. So Arun will get 5,600, Barun will get 5,600, and Tarun will get 2,800. So this is the realization account we have drawn here. Now in partners capital account we have to transfer the profit on realization. So in partners capital account I am transferring this profit on realization. So in realization account debit to partners capital account. So in partners capital account I am writing by realization account 5,600, 5,600 and 2,800. Now the balancing figure in the partners capital account will be paid to the partners. Okay, so real partners capital account debit to bank. So the first balancing figure in Arun's capital is rupees 15,600 that will be paid to Arun. The balancing figure of Barun is 45,600. And the balancing figure of Tarun is 22,800. Now we have to transfer the amount that was paid to Arun, Barun and Tarun in bank's account. So in bank account we have to record by partners capital account so Arun is going to get 15,600, then Barun will get 45,600 and Tarun will get 22,800. So total amount is rupees 84,000 and total of debit side is 1,12,000 and the total of credit side is also 1,12,000. So the entire solution I am presenting in one screen. So we have drawn the three ledger. One is the realization account, bank account and the partner's capital account. So first of all, we have to transfer the balances which is given in the balance sheet in the respective ledgers. So all the balances of asset side has been transferred to the debit side of the realization account. The partner's capital has been transferred to partner's capital account. The general reserve is distributed among the partners in the PL ratio and the balance of bank account transferred to bank account. Next, the process of realization, that is by selling the assets and we have to pay off the liabilities. Then the profit or loss on realization will be calculated. That will be distributed among the partners and then we have to close the partner's capital account by either paying the partners or they have to bring in cash for the amount of loss. Thank you. Thanks for watching the lecture.